Ladies and gentlemen, welcome back to another crazy trading day of 2023. We have done a lot today, but we have done nothing. The markets have not moved, but look at some of these moves. They're pretty dang big. Now, this one in particular, I want to highlight here in this video because this was the senior Fed lending survey that came out, in which Jerome Powell highlighted last week that they are waiting for this. They are waiting to see what happened on this survey, and that information is out for us right now. So we're going to get into that. We're going to talk about everything you guys need to know about AMC stock here in this video. So do me a quick favor and hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section if you have not done so already. So first things first, let's go ahead and get into this survey. So it says right here, Fed report shows banks worried about conditions ahead with focus on slowing economy and deposit outflows. Tumult in mid-sized institutions caused banks to tighten lending standards both to households and businesses, potentially posing a threat to the U.S. economic growth, according to a Federal Reserve report Monday. The Fed's quarterly senior loan officer opinion survey said requirements got tougher for commercial and industrial loans, as well as for many household debt instruments such as mortgages, home equity lines of credit, and credit cards. The loan officers further said that they expect troubles to persist over the next year, owing largely to diminished expectations for economic growth, as well as fears over deposit outflows and reduced risk tolerance. Asked their expectations for the next year, respondents gave a fairly gloomy outlook of what's ahead. Quote, banks reported expecting to tighten standards across all loan categories, the report said. Banks most frequently cited an unexpected deterioration in the credit quality of their loan portfolios and in customers' collateral values, a reduction in risk tolerance, and concerns about bank funding cost. Bank liquidity positions and deposit outflows are reasons for expecting to tighten lending standards over the rest of 2023. At the same time, the survey showed weak demand across most categories. In particular, the report showed tighter standards and weaker demand for commercial and industrial loans, an important bellwether for economic growth. Those conditions were seen across all business sizes. So what this is basically saying is lack of economic activity, right? Lack of motivation for people to go out and get mortgages or any kind of loan instruments. At the same time, the economy is really starting to slow down, and they do feed into each other. And credit tightening, that is where, just let's be simple here. Let's say the requirements to get a mortgage are 640, a 640 credit score, right? Now let's say the requirements are 660. You're going to push some people away from getting a mortgage. That's the simplest way to dumb this down, but it works in the same way as a company. If you own a company that does $1 million in revenue a year, well, you might be able to get a $2 to $3 million loan in the worst case scenario if you had to, right? Just being dramatic here. Well, maybe now you can only get a $1 million loan or a $1.5 or $1.75 million loan. This again, slows down the economy even more. It's like a loop that just keeps going. One feeds into the other, and the other feeds into the other, and it makes the situation worse economically speaking. So that is what came out today on the S&P 500 that caused this big drop. And when I say big, it's big for the day. It's not really the biggest move in total because the S&P 500 has done literally nothing today. Like, has not done a thing. Kind of crazy how stable you are. Yeah, you are back and forth, but you're very stable on the day. And I think a lot of people are just waiting for the inflation report that will come out on Wednesday. On another note, TD Bank, they are falling today. Toronto Dominion. Now, this is because basically the SEC said they could not buy Horizon Bank because they had some suspicious transactions. That never is a good thing to be said. So we'll see what happens with this. It could spark more of those banking concerns. Hopefully not, because that could get ugly very, very quickly. And the markets, after all, are pricing in the Fed to start cutting rates as soon as July. Those odds are like neck and neck. I think it's a 45% chance of a cut in July and a 55% chance of a pause in July. But just one data point from here could really change things. And that could change the overall sentiment in this market, because after all, market valuations are propped up on Fed rate cuts. Without those Fed rate cuts, stocks will fall. Stocks have to fall without Fed rate cuts because they're so expensive. You are in a stock market bubble after already popping the bubble. You are back in a bubble. And it is really in just the 5 or 10 large tech stocks or large mega cap companies that are really powering this market ahead. And that's why I think the collateral crisis could get much worse for shorts that have short positions in stocks such as AMC, because most things have done bad in 2022 and 2023. But large tech, if you look at Apple, they're almost at all-time highs. They're like them, Microsoft, even Amazon, Google, Nvidia almost at all-time highs, Meta, all these stocks that are close to all-time highs. I mean, they are powering the way, and that collateral is being used from those stocks to fund these short positions in AMC and to remain in these short positions with AMC. Now, coming out right about now here, we just got a couple minutes of trading left of today. You are going to be getting earnings from PayPal, Palantir, Devon Energy, and Lucid. Big one you want to watch is PayPal. Obviously, we've already got quite a bit of earnings so far on credit card companies, but this more so services your lower income demographic folks, right? A lot of people that use Venmo and people that really power this economy, heavy spenders. You're going to get kind of some insights on how the broad economy is doing from PayPal earnings. So that could be important, and it could move the markets, although, again, not the biggest earnings. And then tomorrow you're going to get Fisker pre-market and Nikola pre-market, as well as Novavax and Coty and Under Armour, as well as EVgo and Duke Energy. Now Tuesday after hours is going to be even bigger, because you have Airbnb, Rivian, Oxy, Twilio, Affirm, Upstart, Wynn, Dutch Bros, Celsius, and Luminar. So some of those companies could be a lot more important, but by and large, Wednesday is the big day of this week. You're going to have Roblox in pre-market, Icon Enterprises, as well as Wendy's, Teva, Coherent, Brooksfield Asset Management, Blackstone, First Citizen Bank Shares, and Village Farms. Wednesday after hours, Walt Disney, The Trade Desk, Unity, Allergro, Beyond Meat, Catalyst, Robinhood, Nutrien, and Magnite. So Walt Disney, obviously, going to be a big one. The Trade Desk, that stock is almost at all-time highs as well. So some pretty important ones Wednesday. But really, the big story is the inflation data. So coming on Wednesday, you'll get inflation month over month. The headline numbers, you're expecting that to come in at 0.3%. Last month's reading was 0.1%. So an acceleration in the headline inflation rate month over month. Inflation rate year over year, you're expecting that at 4.9%. Last month's reading was 5%. Core inflation year over year, you're expecting that at 5.6%. Last month's reading was 5.6%. And core inflation rate month over month, you're expecting that to fall to 0.3%. Last month's reading was 0.4%. So the Fed made it very clear last Wednesday, if the labor market continues to be tight, in tandem with inflation remaining higher, really not coming down or even accelerating even more, well, you're going to get another hike coming in June. Markets are fully expecting a pause. About 80% of investors are expecting a pause. So if that starts to flip towards like 80% of investors expecting another rate hike, well, that's probably going to mean some downside for this market. All in all, market's not really caring too much today. It is a Monday. It is a pretty slow day, like I said. Not too much actually happened today besides that survey. Now with AMC stock AMC is in the green today by about 0.15%. You were down like 3% in pre-market. You went up. You were trying to break out above that $6 range, and that is really the level shorts do not want AMC to break above. We have this blue line right here at $6 per share. This was the most highly contested level of the day today, and it's quite clear above $6, AMC really starts to get a lot squeezier, and you can look at this blue line, $6. Every time you really break above $6, you have gotten a rally, or even back here in May of 2022, you fell to $6 per share. 2 months later, you rallied from $6 per share to $17 per share. Even back here before the June rally, in like May and March and April, you were fighting the $6 level. You finally got a clean break of that, came down, stayed above $6 per share, and then you rallied 1,000% from there, right? So $6 per share is not just an important level. Now it's been an important level with AMC stock. So it looks like there's going to be a lot of fighting around that level. And if we can break above that and get at least one day to close above it, I think that's going to lead to an even stronger rally, in my personal opinion. Now, live short interest are free float sitting at 24.5%. 126.83 million shares that are currently sold short. Keep in mind, 24.5% short interest, probably not the real numbers. We have not gotten another official report, but the last official reported short interest we got was for April 14th, and the short interest was 26.62%, so much higher than where we are now, over 2.1% higher than what the current estimate is. So I'll be watching for that next reported short interest number, because the estimates are going down. I don't really think the short interest number, though, is going down. I just think shorts are getting, screwed on their positions. And I think some of the upside we've seen is shorts hedging out those positions, not necessarily covering on those said short positions. So there you have that. 126.83 million shares sold short. Again, this is probably like 135 million shares sold short. We'll see once the next report does come out. Cost to borrow average at 314.47%. Cost to borrow max at 328.53%. And the last update we got for the cost to borrow minimum was around 269%. Interactive Brokers has about 1.2 million shares available to be traded or lent out with a cost to borrow rate of 153.5%. So some pretty high numbers you're still seeing on the cost to borrow rates. And I think it's just wild that we have not seen those come down really at all. And that's definitely got to hurt if you are a short. Now, for this Friday, option activity in AMC, got about 18,000 calls currently in the money, 78,000 calls out the money. In the money puts at 22,000, out the money puts at 104,000. So I will watch this week to see if the option chain does start to accumulate. If you get a break above $6 per share, I would expect a lot more call buyers to actually step in and start to buy these options based off of historically how AMC reacts around $6 per share. Tends to be very, very positive. S&P 500 coming down just a little bit towards the end of the day, but for context here, you're up 13 cents on the day. Like some of these days in the markets with the S&P, you've went up or down $10. $5 to $10 on the S&P 500 has been pretty common. You're moving 6 cents today? That's insane, right? So keep that in mind for context. Markets are not really bullish. They're not really bearish right now. You're really in a kind of mid zone, and you'll likely stay that way unless PayPal has some bad things to say, or until we get the last kind of update coming with inflation. So that's really it. Not too much else to actually say today. Again, it was slow. PayPal and after hours, that's going to be a big driving factor of the day tomorrow. Most likely, if there's an outlier there, if it's really good or if it's really bad, that could really help or hurt the markets. As far as AMC stock on a technical basis, we've kind of already said it before. You're above the 50 and 100-day moving averages. You're fighting at $6 per share. The next level is that 200-day moving average at $6.80 per share. If you break above $6 per share, it's almost a given in my mind you're going to retest that 200-day moving average. If you break out above that, that's where things really start to look a lot more bullish. But again, we're not above $6 per share yet. So I don't even want to get to that place yet. And just overall, you've been in an uptrend. The stock is performing very nicely. If we look at some of the moving averages or indicators, right? The RSI is at 62.64, under or above the neutral level, I should say, but you're not too bullish. I mean, you're definitely not bearish on the RSI, but it is more or less slow and steady going with AMC, but that steady has been to the upside recently. Now, MACD also indicating some more, bullish volume heading into the stock. As you can see, all of these green candles down here, and this yellow line is above the blue line, showing good momentum as well. Pretty slow though. There's not a huge divergence here, but it's been bullish for quite a while. Even down here when AMC was hitting the lows, you almost stayed bullish around April 4th and April 5th, even though the stock was down 23.5%. Look at the MACD. Hardly went under this blue line, and you've been bullish ever since. So there you have it, guys. Let me know what you guys think about AMC today and the rest of this week, as well as how you guys think about the debt ceiling and all the other crises that are currently going on. The debt ceiling is slowly, emphasis on slowly, starting to creep into this market. As we get closer to the X date on June 1st, you're going to see a lot more panic around the debt ceiling and any potential debt downgrades, basically credit score downgrades. The U.S. could see it's going to make borrowing worse. It's going to make the stock market worse. It's going to make households worse. It'll make everyone worse. So watch for that as well. Nonetheless, thank you guys for watching. If you guys want to come trade with me live in real time as well, link down below in the description of this video. Nonetheless, you guys have a great rest of your day, and I will see you in the next one.